Okay, good morning. It is my pleasure to welcome all of you to this webinar of the Actuarial Association of Europe. I am the chairperson of the AAE Artificial Intelligence and Data Science Working Group. The AI Act is really a milestone in the regulation of the use of artificial intelligence. The AAE has published a paper on what an actuary should know about the AI Act, and we are now digging a bit deeper in that area. Actuaries, as we know, are heavy users of data and technologies to manipulate it. We also have our codes of conduct and our standards to guide us into responsible use of AI. Mostly these have risen for bad experiences over time. But with this actuarial toolbox, we feel that we can play an essential role in implementing and putting the AI Act into use. Today we are having Julian Frohnecke from the Commission to help us forward, but we will also have writers of our paper to dig deeper into what is happening in the area of AI. We will not allow live interventions to our seminar, but we have the Q&A tool or Q&A channel of this Zoom interface. And you can post your comments and questions to that. I will monitor what will happen there, and if time allows, ask the questions or say the comments while we are going forward. The presentations this morning will be recorded and they will be available in active view for later use and for those who couldn't attend our seminar live. So without much further ado, we can go forward. We have the pleasure of having Julian Frohnecke from the Commission to help us forward in understanding the birth of the AI Office and what is happening in the area currently. Julian is a legal and policy officer at the AI Office. He's working in the unit A2, which is responsible for regulation and compliance. He has started only in May this year, so he has fresh eyes on the use, on the implementation of the AI Act. Although we all know that AI Office as such is a newcomer to the Commission, so there couldn't be anybody with tens of years of experience in the AI Office. Julian has worked in the federal government in Germany, in the Ministry of Economic Affairs in Berlin, and then also in German Embassy in London, with a focus in both roles on artificial intelligence and its international governance. Julian is a lawyer and holds also a degree in business administration. So I have now the pleasure of giving the floor to Julian to tell us our Commission views on the AI Act and its implementation. So, Julian, please.
Thank you so much, Esko, for the kind introduction. I will share my slides that I have prepared for this meeting. I hope you can see them now. Let me start. I'm very happy to be here, and thank you so much for inviting me and the AI Office to give a short presentation on the AI Act and its relevance for financial services. I want to structure my presentation here today in 3 parts. First of all, I want to give you a general introduction of the AI Act to give a base for the further discussion. And you may know the AI Act maybe well already, but I think it's good to have a basis and common ground for all of us. In a second part, I would like to dive deeper into the specific rules that are most relevant for the financial services sector, and also touch upon the interplay between the AI Act and financial services law, at least from a perspective of the AI Act. And then I would like to conclude with a little bit of an overview of the AI Office, the whole governance structure, and the deliverables we are currently working on. So, a general introduction to the AI Act. First, the AI Act came into force on the 1st of August 2024, but we have a staged applicability, so the rules will come into application throughout the next years. I'll show you a slide further in the meeting. But first of all, what is the AI Act? It's first and foremost a product safety regulation. It aims at protecting the health and safety and fundamental rights. Whenever an AI system is placed on the market, is put into service or being used, certain requirements have to be met. It's horizontal in its scope. It covers all the sectors, not only financial services, also law enforcement, also public services, but or private services, also machinery, toys, classical devices as well. The AI Act follows a risk-based approach. That means there are different risk categories, and every obligation in those risk categories is commensurate to the risk itself. Then the AI Act tries to create trust along the value chain of the whole AI lifecycle. I said there are certain requirements when you place the AI system on the market or put it into use, but those requirements are not only focused on this specific moment of placing on the market, but they will continue to apply. And of course, with that approach to protect health, safety, and fundamental rights, the AI Act aims at creating trustworthy and human-centered AI, and I think that's always a good argument for its adoption and uptake in the economy or also for public services. As I said, the AI Act follows a risk-based approach across the life cycle. You see this pyramid here. There are certain AI systems which have an unacceptable risk and they are prohibited. For example, social scoring or biometrics, certain applications at least. Then there are requirements for high-risk AI cases. For example, when AI is used in employment or in medical devices. Then we have certain AI systems that need to meet transparency rules. And then last but not least, you see at the bottom level of the pyramid, no rules for most of the systems that just can be placed on the market and that are not considered to be high risk or require transparency. But also with these rules for AI systems, there are specific rules for general purpose AI models on transparency and risk management. I will not focus on them today. Yeah. With all of this, the AI Act enables trustworthy AI development and uptake. It addresses major risks while avoiding overregulation. It is complementary with other European law, and it is future-proof and adaptable. This technology is evolving quickly. I'll come back to that later because also standards play a big part. Yeah. Well, first of all, the prohibited systems. These rules on prohibition are actually applicable since the 2nd of February 2025. And the Commission published in February guidelines on these prohibited practices. They provide practical use cases and help entities to better understand how to comply with these prohibitions. And for the financial services sector, maybe I wanna explain or highlight one of those prohibitions. That is the one on social scoring. You can see here the legal text on that slide. AI systems for the evaluation or classification of natural persons over a certain period of time based on either their social behavior or known, inferred, or predicted personal or personality characteristics are prohibited, but there's a cumulative second component. That social score needs to lead to the detrimental or unfavorable treatment of persons, either in social context unrelated to those in which the data was originally collected for, or that is unjustified or disproportionate to the behavior. We can outline also an example. If a bank uses an AI system to determine the creditworthiness of people or to decide whether an individual should obtain a loan based on social behavior from unrelated context, here the internet connections or social media, it could be a prohibited AI system and fall under the scope of Article 5, Paragraph 1C. But on the other hand, we pointed that out on the slide as well, lawful evaluation practices and compliance with the union law, which regulates what data is related and ensures fair treatment, is out of scope. So for example, financial credit scoring systems, you see this here, but I'll come to that more in a minute. So this was the top of the pyramid, the prohibited system. They're already applicable, those prohibitions. The second layer was a high-risk system. So what is a high-risk system, and when is an AI system a high-risk system? There are basically two approaches in the AI Act. First of all, if the AI system is embedded into a regulated product or it is itself a regulated product, we have all those products and product regulation listed in Annex 1. Then under certain conditions, those AI systems are considered to be high risk. I would say for financial services, this part is not so important or crucial. More important is the second point here. There are certain standalone AI systems intended to be used in one of 8 high-risk use cases that are outlined in Annex 3 of the AI Act. And you see those 8 use cases here, from biometrics over critical infrastructure, employment, education. And the one that we want to focus on today is those of essential private and public services. And if it's used for those, and I'll come to the use cases, to the specific use cases on the next slide, those systems will be considered high risk. But the legislator also added a filter to these AI systems. Certain AI systems that are used for those purposes can be excluded if they perform a very narrow procedural task or perform a preparatory task, or they are just intended to improve the result of a previously completed human activity. You see all the 4 examples when this filter applies. So this is maybe one of the most important slides here today. So the high-risk AI use cases in the financial sector. And as I said, under Annex 3.5, there are 2 use cases which are highly relevant. If an AI system is intended to be used to evaluate the creditworthiness of natural persons or establish their credit score, it's considered to be high risk. Or if an AI system is intended to be used for risk assessment and pricing in relation to natural persons in the case of life and health insurance. You already see that the second point points down which essential private services are covered here, namely life and health insurance. In the first point on creditworthiness and credit score, the legislator didn't narrow it down to certain essential private services, to loans, for example. This is broad. All essential private services can be covered here. And I think recital 58 makes a few examples of like telecommunications, electricity, for example. But if an AI system is used for the purposes of detecting financial fraud, it is exempt from that high-risk category. Then you see on the lower part of the slides just a general remark: entities that are not regulated and supervised under the financial services law, for example, credit bureaus, are subject to the full set of rules that I will outline on the next slide. But if financial institutions are regulated by EU law subject to a special regime, there are certain provisions in the AI Act which will take this into consideration, and I will come to these in a minute. So I said we have high-risk systems, and before they are placed on the market or used in the European Union, they have to honor, or the provider has to honor, certain requirements, and those requirements are listed in Articles 8 to 15 of the AI Act, and you see them here lined out on those tiles. Providers have to follow a risk management, certain requirements for data governance and data quality, record keeping, transparency, human oversight, and all this has to be adhered to before those systems are put on the market. And the provider is responsible for a declaration of conformity and the CE marking, which in the case of those systems under Annex 3 that I just pointed out, usually there's no third-party conformity assessment required. It's a self-conformity assessment as a general rule. I said also the AI Act is future-proof and uses and relies also on, or can rely on, harmonized standards. Providers can use those harmonized standards to show that they are in conformity with the requirements of the AI Act. And those standards, those harmonized standards or standards are currently being developed by the standard organizations, which are private organizations. There's ongoing work in ISO and Genelic and the Joint Technical Committee 21. As I'm not an expert on standards, I will not dive into this deeper. But I just wanted to give you a quick overview of the obligations for providers and deployers of such high-risk AI systems. As I said, the provider needs to comply with the requirements on the tiles in the previous slide, has to carry out a conformity assessment, quality and risk management, and those AI systems have to be registered in a EU database. There are also certain requirements and obligations for deployers. You see them on the right-hand side here: human oversight. There might be possible information obligations and a right to an explanation if persons are affected by decisions that are made by these AI systems. One thing I really want to point out is that the deployers have to carry out a fundamental rights impact assessment, and that only applies to some deployers, but credit scoring and insuring risk assessment are in scope of that fundamental rights impact assessment. So this is moving on. This is maybe one of the most important slides for our purposes here, because I want to quickly outline the legal provisions for financial institutions regulated by EU law, subject to a special regime that I mentioned earlier. And there are 3 points that I want to highlight. First of all, financial institutions that are already legally obliged to set up and perform some internal governance processes can integrate certain requirements of the AI Act into this already existing processes. You see here the articles 9, paragraph 10, for example, 18, paragraph 3, and so on. Secondly, there are targeted derogations from certain obligations. For example, when it comes to quality management, financial institutions that already have a quality management system in place and they follow certain rules, the AI Act then provides a legal fiction. It, for certain requirements, sees them as being adhered to, and they are deemed to be fulfilled under the AI Act if the provider or the deployer already adheres to those quality management requirements under financial services law. And thirdly, when it comes to supervision under the AI Act, the legislator also opened the possibilities for member states, or basically I have to say member states will have to designate the market surveillance authorities. And Article 74, paragraph 6, gives them a specific possibility and choice to designate those national competent authorities that are already supervising financial institutions. There are certain requirements for that. But I will not go into detail now, but this is a possibility, and this is actually foreseen to provide or enable like a consistent and coherent application of the AI Act on the one hand and the Financial Services Law on the other hand. But member states are not obliged to follow that rule. There's also a possibility to designate another market surveillance authority under certain requirements. We are still in the pyramid, the risk approach pyramid, and the risk-based approach. And on the right-hand side, on top, you see the little pyramid and where we are now. We are now like focusing on the AI systems that have to adhere to certain transparency requirements. For example, when AI systems are interacting with a human, then deployers must inform individuals subjected to emotion recognition biometric categorization systems, but also generally humans have to be informed if they interact with AI in cases when this is not obvious. Also, we have rules for AI-generated content. AI systems that generate synthetic outputs need to include machine-readable marks and be detectable. This rule also includes the visible labeling of deepfakes, for example. And those transparency rules are put in place to really create trust of the information ecosystem as a whole. But also I have to say the transparency obligations do not affect the transparency obligations for high-risk systems are cumulatively applicable. Just a quick, mindful of time, but I think I have a few more minutes. I mentioned also the NI Act provides rules for general purpose AI models. Those, of course, are the most highly capable models, frontier AI models such as ChatGPT, which was actually a system. And the AI Act also provides transparency rules for those systems and risk requirements for those models who are deemed to have a systemic risk. So there's also a distinction on rules on all of these general purpose AI models. Transparency rules apply. You see them here listed on the left bottom side of the slide, Article 53. And then there are certain requirements according to Article 55 when those general purpose AI systems pose a systemic risk. And we are currently, and that's one of the main topics we are currently working on, is devising a code of practice together with stakeholders. It's actually being done by experts, but the AI office is facilitating this process. So those code of practices are being developed with stakeholders, and they will detail out the rules. And together with those code of practices, we also want to publish guidelines to explain a bit more Articles 53 and 55 and their applicability. So we now enter the third part of the presentation and the final part of the presentation. I just quickly want to familiarize you with the AI governance structure. So we have those rules for AI systems. I already referred to prohibitions, high-risk transparencies. Those will all be supervised by market surveillance authorities on a national level, and national authorities have to be designated by the member states. in the EDPS is responsible for the EU institutions, bodies, and agencies. And for the rules for general purpose AI models will be supervised by the Commission itself, by the AI office. You see on the right-hand side of the slide a bit the general governance structure that is being set up. There's an AI board where the Commission, together with member states, coordinate the implementation of the AI Act on EU level. According to the AI Act, a scientific panel has to be established, which aims at supporting the work of the board and the AI office with independent and technical advice. And we will also set up an advisory forum based on the AI Act, which supports with stakeholder input. And please watch the space, because I think we've recently published a call on those scientific panel for applications. A quick overview on the European AI Office. You see on the right-hand side the different units. I am from this unit AI Regulation and Compliance, but you see that we in the AI Office don't only work on regulation and compliance, but on a lot of other things as well. Safety, of course, for example, but also excellence and innovation and policy coordination. I will come to that a bit later. Yeah, I also mentioned the AI board, where member states send high-level representatives and experts, and which is currently chaired by member states and the AI office as a secretariat. And this AI board gives advice and steers on matters on AI policy and the AI implementation. But maybe, which is also relevant for this purpose here, there are a lot of subgroups that have been established and will continue to be established as well. And there's one on financial services. This was initiated or inaugurated this year. And this is where member states and experts of member states, central banks, etc., and the European supervisory authorities meet and discuss and share views and actually work on deliverables to advise the AI board. Maybe a general timeline. I think, where are we now? As I said at the beginning of my presentation, the AI Act entered into force on the 1st of August in 2024. I said that the general provisions are also applicable since the 2nd of February 2025. Also the prohibitions. The next step is the 2nd of August this year in 2025, and the rules for general purpose AI will come into application, and the governments must be established and be in place. The next year, on the 2nd of August 2026, the rules for high-risk AI systems, transparency, and measures in support of innovation will apply. Those are especially the high-risk rules that I referred to earlier, on the high-risk classification, on risk assessment for health and life insurance, but also the credit worthiness assessment and the credit scoring. And last not least, we have rules for high-risk AI embedded in the regulated products, Annex 1. They will apply from the 2nd of August 2027. So we're right in the middle of this journey. Some quick overview on recent activities. I just want to highlight 2 points here. We've published guidelines on the AI system definition and the prohibitions in February. Please have a look on that guidance. And we, as I said, there's ongoing drafting work of the Code of Practice on General Purpose AI and the guidelines, and they will be published soon as well. But if to take a bit of a further look of what is coming, we will, and we're currently working on a report that is foreseen under Article 112, where the AI Office is obliged to evaluate prohibitions and also certain high-risk use cases. We work on the guidelines on the classification of high-risk systems, and they will be published by the 2nd of February 2026, before those rules come into applications. As I said, there's ongoing work on standards. There is ongoing work on the requirements and obligations for high-risk systems and the template for the fundamental right impact assessments. I also highlighted on the interplay between union law and other relevant sectoral laws and the AI Act. There will be specific guidelines published as well. And yeah, last but not least, I already mentioned the guidelines on the transparency obligations in Article 50, as well as the code of practice. And there's also a code of practice, combined with those guidelines as well on the transparency and yeah. We do a lot of stakeholder outreach, and I just want to highlight one public consultation, because we were talking about those high-risk use cases, credit scoring, creditworthiness assessment, and we have launched a public consultation on this, and your inputs are highly welcome, and I want to invite everyone to have a look at these on the Commission pages. This consultation aims to gather input on those rules on high-risk systems. It is running for 6 weeks, and it will close on the 18th of July, so there's still a bit of time left. Yeah, I can conclude with a last slide here. I said the AI Office doesn't only work on regulation and compliance, but also is heavily working on strategies to make Europe the best continent, the best place to develop trustworthy and advanced AI. And the Commission published the AI Continent Plan in April, AI Continent Action Plan, as its full name is, and maybe you have a look at that as well, with a lot of strategic approaches to AI factories and apply AI strategy, and so on. So with this, I want to conclude my presentation, and thank you all for your attention.
Many thanks, Julian. This was great. I especially liked that you talked so much about financial services and what this means specifically to financial services. And well, I was warned that now I need to make the declaration that while I might look like one, I am not an AI system, but I'm a deep fake. The viewers can make their own decisions about that. I didn't see any questions coming to the Q&A tool, so probably your presentation was extremely clear to everybody. And yes, we are answering to the consultations. One of the questions for me is that I think as AI Act is horizontal, you must receive a flood of responses to the consultations. Is it true?
We hope so. Also, there are 8 specific use cases, and I think that are highly relevant, of course, because it's high risk. So we hope for a lot of input that we can analyze and then use for the preparation of the guidelines.
Yeah, you talked about one of the things I was wondering here was you talked about fraud detection in the context of high risk systems, but actually I was thinking that some things in what is prohibited might be there could be temptation in using the criteria in fraud detection. But in fraud, in high risk area, in prohibited area, there are probably no exclusions for fraud detection, is there?
Not legally.
Yes.
There's no legal provision on that. As I said, we published guidelines on those prohibitions that also take a closer look on the social scoring and also on the interplay with other legal acts, and so this might be worth taking a look.
Yes, I think it must be an area where institutions, or I mean, market players must be very careful in not really doing in fraud detection something that falls into the prohibited area. I think the annex really is easier to change compared to the body of. I think. Sorry, do you think? We have been wondering whether why it's just life and health insurance that are included there. I think we could have thought that general insurance or non-life insurance, and then maybe pensions could be there. Do you think there could be developments taking them to the high risk area?
Well, for now, I think Annex 1 and the legislator has been very clear in what essential private services he or she or they want to see covered. And for now, as I also said, we provide an evaluation of those annexes. But for now, we work, of course, on the legal basis that only those two services are covered here under point 5C.
Okay, thank you, Julian, for a wonderful presentation, and we hope to be in touch in the future. One thing we liked in the guidelines was the idea that not everything that is complex is AI, because I think many applications are there that are hard to understand, but anyway, somebody is taking responsibility for them. But we are moving forward with our webinar. The next topic will be really close to what we wrote in our paper. The title of the next part of our webinar is Navigating Europe's AI Act, Insights for Actuaries and the Insurance Sector. And this will be co-presented by Bogdan Tautan and Jonas Hertz. Bogdan is the vice chairperson of our Actuary Intelligence and Data Science Working Group, and Bogdan has recently been nominated to lead the AAE Risk Management Committee. And Jonas was instrumental in writing the paper, and comes from Vienna and the Boston Consulting Group. So Bogdan and Jonas, you are now free to run us through your ideas.
Yes, thank you very much, Esko. I will just share my screen. Should work well. And good morning and hello everyone, and welcome to our webinar again. So we will now dive a bit deeper into the topics that we addressed in our recently published paper from AAE. And while the slides that we have will be somehow complementary to the presentation that we have already seen, we will try to address some of the actuarial topics as well, and implications to the industries that we work in as actuaries. I will cross in the first instance through 5 points why the AI Act matters and why actually it's such an important milestone to regulations within Europe, without trying to duplicate too much or repeat myself with what has been presented. Compare it a bit to the international context, the way that we also actually do it in our paper. And also looking at some of the key features and other regulations, including an overview on the definitions and recent guidelines that were published by the European Commission that have already mentioned. And I will then pass onwards the word or create a transition towards Jonas' presentation that will look even further on how this will impact actuaries and our industries and how can we adapt it in a responsible manner and a good fashion. So without losing too much time, why the AI Act matters is, before looking into the AI Act, I think it's good to just give a recap of different categories of AI systems or AI models. And I know that many of you might have seen these slides before or this information, but I think it's good to have a common understanding on where AI started as early as 1950s and how it was meant basically to mimic actions and intelligence of human beings, and how that actually AI evolved throughout the past decades, from having forms of classic AI applications such as machine learning or supervised learning techniques that we often see in our predictive analytics areas, and then going even further and evolving into what we call deep learning, that are more complex neural networks, referring to semi-supervised or reinforced learning methods. Think of the natural language processing tasks, chatbots, and so on. And then what actually created a huge area of concern is the generative AI, because of its implications and its risks. That is a collection of different methods, even more complex and more technologically advanced, helping with video, image, or speech recognition. So before going into further details into the AI Act, I just wanted to show some concept of how these neural networks work. Basically, they have been derived and inspired by studying the brain of animals in a biological manner. And to understand the complexity of AI systems before applying a set of rules, it's of course necessary to understand how they work. So basically, each node receives a weight or a signal strength, if you think in neural terms, that contributes to its output. So basically, the whole layer of networks, which if it has two or more hidden layers, you can refer it to as deep neural network, crosses from a set of input layers towards an output layer, trying to achieve its desired goal or output. So what you see here is basically a network or a bunch of data like images or numbers, and the network tries to adjust in a way that it's improving its performance by training. So by training an algorithm, you basically minimize the difference between the predicted output and the actual target values. And things get even more complex when you talk about, for example, gradient boosting methods, where you ensemble supervised machine learning algorithms, combining multiple weak learners and in order to create a final model. So basically finding an optimal set of parameters for the model by training and reducing the risk or minimizing the difference between the predicted output and the actual target values. So I think you see already, as we have algorithms, complexity can increase drastically if we implement different types of AIs, and that is exactly why in our point of view, the AI Act is such an important a regulation and a milestone, because it's first of all a pioneering one, establishing a comprehensive governance framework. It is a legislation, and as opposed to other directives, it does not need a national transposition, such as, for example, unlike directives such as the Insurance Distribution Directive, where the transposition is applied by member states. It fosters responsible use of AI, of course, and it also creates a synergy with other regulations and directives, allowing actually actuaries to align compliance efforts and responsible AI deployment. And of course, as we've seen and heard from Julian before, we saw that it actually also fosters innovation and allows for rapid technological investment, which is still a key part of the Act. And that being said, if we look at the international context, the AI Act actually relies very much on an internationally defined definition, which is also important to maybe repeat or look again at, as it describes what an AI system is. This is the definition that OECD introduced a while back, probably around 2019, and later on revised it a bit. But two important aspects in this definition are basically the terms autonomy and adaptiveness. So when we talk about the autonomy, I think the definition implies that the level of autonomy is it's a necessary condition for qualifying an AI system or not. If a full human involvement might take place, then a system will be basically placed out of the definition and therefore also implicitly out of the Act. However, we need to be very careful, since the human intervention can be either direct through manual controls or even indirect through automated system-based controls that will allow humans to delegate or supervise system operations. So that autonomy is a matter that needs to be looked closely at, same as adaptiveness. Where the term adaptive refers to in this definition actually indicates if a system but is not necessarily but not necessarily possesses adaptiveness or self-learning capabilities after deployment. So adaptiveness can be instructive, but is in the end not a decisive condition, and it is again an important factor when we look at our current actuarial models, or maybe more traditional models, to assess if they are adaptive or not. So from an international perspective, we've seen quite different approaches from our stakeholders and partners in the advancements within the AI landscape. For example, in United States, it differs quite a lot than what we see in Europe. The US adopted actually a more innovation-driven, decentralized approach while relying on voluntary frameworks and sector-specific guidelines rather than having a federal AI law. While the Congress has enacted the National AI Initiative Act in 2020, various agencies, including the National Institute of Standards and Technology, or the Federal Trade Commission, or even the National Association of Insurance Commissioners, are actually developing their own set of frameworks and guidelines for the industries. So it is very much innovation driven, but it has a decentralized approach as opposed to the European Union's approach. And in China, again, maybe a bit closer to what we are dealing with, but it's very much a state-driven, security-focused approach, prioritizing certain control mechanisms and national security applications. The transparency and ethics remain relevant. However, given that there is no comprehensive AI legislation, rules promulgated by the Chinese government involve only some specific industries and technologies. So administrative provisions on algorithm recommendation, deep synthesis, which refers to data and management of data, or Gen AI services, all these rules and laws are often only implemented by certain sectors, and some sectors are left out or are on ongoing development. So as I mentioned, the European Union has a more centralized approach and a legislation, which is quite important and human-centric, and relies very much on the definition that I just presented. Now, diving a bit deeper in the key features that we also highlighted in our paper, I will try not to repeat much myself, but give an overview of the areas that we addressed in the paper in a swift manner. Important to know that that the initiation phase of the Act started as early as 2019 with the high-level expert group of the European Commission, which presented the so-called ALTAI, or the Assessment List for Trustworthy Artificial Intelligence System list, which also included a set of principles or guidelines that refer to accountability, for example, fairness, human oversight, or societal and environmental well-being, all being very important when assessing the impacts of AI systems and allowing the deployer or the provider, as we heard before, to create algorithms that are actually explainable and well documented, including the roles and responsibilities within organizations. So promoting the fairness and the responsible use of AI was at the core of what the AI Act is today. This is again a recap of what has already been presented with the timelines of how different categories within the AI Act will be applied or are already applied. Again, what one important maybe aspect to mention again here is the iterative risk management process. We are often used on having risk management processes, especially in the insurance and financial sector as a whole. But the iterative process is something that we need to take care of in greater detail than before. When it comes to the operators, again, I think the presentation that we just experienced gave more than a good detail on the operators. Here is just an illustration on what has been already mentioned, with the provider being actually the one that develops the system and ensures that the appropriate operation of the system is in place. And again, the conformity assessments are very important, as well as the technical documentation, logging, and the record keeping. Similarly, the distributor, and I omitted here the importer, will make these systems available to the market, ensuring standards and compliance, of course. And in essence, the last one will be the deployer, which is the user of the system, ensuring that all other requirements that have been placed beforehand are well executed, safeguarding human oversight. Without going too much into details into those as they were already explained, I would like to create an interlink or interconnection with other regulations, which we also addressed in the paper and have been mentioned briefly before. But the three most important ones that we identified while writing the paper are actually the ones from Solvency II, GDPR, and DORA. We've seen as actuaries and financial quants or implementers of models that many AI Act requirements align very well with Solvency II. Especially those of risk management, documentation, and monitoring. So we can actually leverage existing expertise in risk frameworks, stress testing, and compliance. And referring again to Articles 9, 17, 18, 19, or 26, which are particularly significant to cross when dealing with both Solvency II, which we are already do, and implementing new AI Act requirements. Similarly for GDPR, I think at the core of the AI Act, and also at the core as primary objective of GDPR, it's the protection of individuals' fundamental rights, especially when we talk about personal data, which is essential in the workings of an AI system. So all the principles from GDPR, such as the lawful, fair, transparency, and accountability, are directly reflected in the AI Act, and are requirements especially in the area of high-risk systems which process personal data. Think of these life and health insurance practices that are part of. And a bit of outside of our field, or maybe less related at this stage, but it's DORA, the Digital Operational Resilience Act, which refers very much to strengthening the IT security of financial entities and mandates robust ICT risk management framework. So we've seen all these requirements, robustness, security, and actually ICT resilience being considered by the Act, and DORA already tries to implement those at national or company level. So this conformity assessment remains very relevant when we look at least at those three, but there are many more, of course. However, the challenge remains. Overlapping compliance requirements is actually something that remains relevant, and we as actuaries, I believe, need to navigate these complexities and ensure the compliance across all frameworks as effectively as possible. Jumping a bit from the area of the other regulations and the interconnections among them, I think some key messages that we are trying to provide with our paper relate also to the definitions and classifications of AI systems. First of all, we've seen, and it was also mentioned by Julian, the European Commission's recent guidelines, which was published in February, if I'm not mistaken, on the definition of AI systems, provides really a lot of more clarity on how to deal with these definitions. So, for example, systems that fall or are not included under the Act are being clarified, and some examples in the guidelines, if you read it through, are those that actually refer to system based on classical heuristics, very common for us. Basically, those are problem-solving techniques or experience-based methods that find approximate solutions efficiently because they apply a predefined rules or algorithms to derive this solution. So anything with experience-based methods that we use sometimes might not fall under the Act. Similarly, if we look at the improved mathematical optimization methods, these are methods such as linear or logistic regression methods are being excluded, or could be excluded if they are not complex enough and they are are more traditional in that sense. Then we have the simple prediction systems, and this is a bit of an area that requires a bit more assessment because some prediction systems that actually include basic statistical learning rules can be classified as machine learning approaches, but might fall outside of the scope of the AI Act or the AI system definition, and that is very much related to their performance or applicability. And similarly with the basic data processing systems, so predefined explicit instructions developed or deployed to execute very specific tasks or manual inputs or rules without any learning or reasoning are also being excluded given these guidelines. So some remarks on this area is that irrespective of which model or system falls under the AI system or model definition, I think it is important as actuaries to categorize these systems properly, even though it remains challenging, to look within our organizations very well at how we define models and our model governance frameworks. Is that system or model, which I hear often interchangeably being used, a system and a model are used often for the same purpose in the definition, is that falling out of the scope of the Act? Which category does it fall into? Is it a high risk or not a high risk system that we heard also, like detecting fraud, for example? And is it in need of fundamental rights impact assessment? So these are some remarks that you might want to keep in mind when dealing with categorization of classifications of systems or even actuarial models. And then before passing the word to Jonas, I would just like to give a brief introduction on why the ongoing governance and compliance actually is quite important. Firstly, I mentioned the iterative risk management process that the AI Act implies or asks us to do. We are often used with validation and management frameworks that allow only a one-time obligation, and is sometimes re-evaluated years after. Those refer, of course, to traditional models that are more static in their way of working. However, in my personal point of view, it would be great to implement a framework that allows you to continuously monitor and have a continuous risk management in place, allowing to interact with regulators, documenting, monitoring, or deploying system in a more automated or autonomous fashion, I would say. That way we can apply corrective measures and incident handling and have swift actions when it's a model is non-compliance by reporting serious incidents. So what you see here on the left-hand side is just an illustration of a set of risks that models or AI systems can pose, and a sort of a DevOps infinity loop that allows you to run through the life cycle of a model more easy, without having to worry about extra requirements, while covering already requirements that are in place and allowing you for future to be more sound in terms of complying with the AI Act. So that will bring me to my end conclusion that there are benefits and opportunities for actuaries in working in this way, but also in approaching the AI Act in a good manner. Meaning that we as actuaries can contribute to society and public trust. We can align our standards and governance framework, existent ones, and develop them further to allow the adaptation of more advanced systems. And we can, with our mathematical background, of course, allow and adopt more AI transparency, explainability around the systems within our organizations and innovate in our risk modeling approaches. This slide was used mostly as a transition to Jonas' storytelling and presentation, which will actually look on how to approach the AI Act more from the industry and practical perspective. And will also exemplify more on how actuaries can actually help their organizations adapt this the set of rules that the AI Act imposes, but that actually allow us to improve our risk management methods and applications of actuarial models. So Jonas, I would like to pass the word to you.
Thanks, Bogdan, and welcome everyone. Great to be here. Yeah, two things I would like to cover now. So the first one, and I will be quick because we only have a few minutes left. First is an industry perspective, like looking a bit at what insurers are doing and how they are approaching the AI Act and AI overall. And my objective would be that maybe there's one or the other hint that helps you in developing this further. And the second point is really, why is this, in particular the AI Act, a big opportunity for actuaries? We in the AAE, we really push towards making this an even more important topic, and we just want to highlight that the actuaries can really help in professionalizing AI. So let's jump into the first point. So an industry perspective. If I look at our clients, this is a typical approach how the EU AI Act is approached. It's mainly in 3 steps. First one is the inventory, second one is the topic on governance, and thirdly, it's on AI governance tooling. Let me elaborate a bit on the first 2 here. So what do I mean by an inventory? First of all, it's important to have a baseline ready. So to really understand what does the AI Act mean, and we come to it on the next slide in a second. And like article by article, what does it mean? And what is also the link to other regulations? And Bogdan, you already mentioned it. There's Solvency II interlinkage, there's an IDD interlinkage, there's a DORA interlinkage. So this needs to be very clear. Also, what's under the baseline is that you list all your AI systems, and some insurers go beyond, and that correlates a bit with scale. They also list their, let's say, machine learning models, which are a bit more complex, which helps them understand what do we actually have in the company in terms of AI. Then 1B is on the design. So what are the requirements under the EU AI Act in terms of permissible use cases, how does categorization work in the company, what are potential mitigation measures. And then 1C is aligning on group-wide standards. This is particularly interesting for global companies where you were present in the EU, but also maybe in other jurisdictions. And while the EU AI Act is probably a bit stricter on many dimensions compared to regulation in China or US, you need to define some standards globally, and then with certain local top-ups to comply with all the local rules. And this is mostly with what the insurers start to really understand, like, what does the AI Act actually mean? And then coming to the second point on governance. Again, you first need to understand what is already there in terms of AI and model governance. Typically, a lot of it is already there, triggered by Solvency II in particular. And then you need to understand what are the gaps, what are the design gaps I need to fill to comply with the EU AI Act in terms of AI governance. And again, as Julian pointed out, a lot of it is already there and integrated. And we as actuaries, we are trained to use those model governances, and the switch to AI is typically not that far, but there will be gaps. And I would like now to jump a bit more into detail in 2 points, in 1A and in 2B. And if we now look into detail into 1A, so I mean, this all correlates a bit with the scale of the insurer when I look at the insurers. So the positive feedback we receive all the time is that it's very good to really make a concrete list of what are the AI systems. And typically you will find a lot of duplications in the company, that very similar models are used for similar tasks. So there's a real chance to, you know, compile a lot of them. And secondly, if you go through all the articles and are very clear on what is the relevance for me as a deployer, and what are also for me as a deployer, things I can ask to the provider, that's typically a huge relief. And the AI Act provides a lot of clarification on what is the split between providers and deployers. And typically that helps a lot, in particular when you are using very complex AI models or general purpose AI models. And this done systematically really helps to understand your interconnections. And here are, and Bogdan, you mentioned it already, a few articles 9, 17, 18, 9, and 26 that really also in the wording directly link to Solvency II. And on the contrary, also EIOPA is looking in particular at Article 41 in Solvency II and Article 25 in IDD. And there will be more clarity on how these all will interact. Good. Then coming to point number 2B. Let me pause a bit there. So when we condense what is in the AI Act and when we condense what is also in other regulations, we see 6 common topics that insurers are addressing. The first one is accountability. So who is actually accountable for the AI results? What is the compliance around all of this? There needs to be a lot of clarity in the governance. Secondly, transparency was also mentioned before. So that depends a bit on the use case, but in general, AI-driven communications need to be labeled as such. And also users need to be informed when they interact with an AI. So the AI Act is very clear on how to handle transparency. Fairness and equity, that's a very interesting part for actuaries, because there it's about the topic of bias, data bias, output bias. How can you ensure quality and accuracy? And for, let's say, standard actuarial models, we're well trained to do it. And the jump to, let's say, explainable AI and validating AI, it's actually not final. Lots of things can be reused, we already know. Point 4 on data protection, which is also a topic on compliance with GDPR and similar regulation. There we are also well trained as actuaries how to handle data safely. Point 5 here, human centricity. There's a lot of or human oversight is a very important topic in the AI Act, which allows intervention override mechanisms when things get critical. Very important in particular when we are in the high risk field. For example, in America, we've seen a lot of litigation cases recently on health insurance claims where AIs decided whether the claim is being paid or not, and there was no human intervention, and there was a lot of litigation. So these are areas where one can think of where do human need to have a tight oversight or where not. Then point 6, reliability and security. That's really on implementing risk management across the full AI life cycle. So it's an oversight component, but also a security, IT security component to it. And I like these are the 6 topics we always see that are being addressed. And when we go to the next slide, Bogdan, this is now one particular example of such a governance that addresses these things, and it will look very familiar to you because we have the 3 lines of defense. We have certain processes, and this is your infinity loop from before, Bogdan, where you have it's a typical model design process where design, build, test, deploy, monitor, and use it, and that's completely familiar to us actuaries. And if we go to the next slide, Bogdan, this is how a, let's say, typical iterative process looks like. And most of the points you see here are well known amongst the actuarial community, and it's only to comply with the AI Act, there are certain topics that are being added, like the fundamental rights impact assessment or the inclusion in the list of AI systems. But the point I want to make here is that what is asked in the EU AI Act, a lot of it can be extrapolated or abstracted from what we are already doing today within Solvency II. And their actuaries can add significant value because we know how it works and we are at the core of all of these steps typically. Good. Coming to the next point. Final point here, just very quickly. Also, you can define key risk indicators for all these AI-related risks. Just a small example here on bias. You can use user feedback to see, do we have biased statements, or do we, if you count the words that are biased in certain reports, in certain outputs. So this is also a topic that insurers are working on, but that's also quite straightforward actually to implement, and typically it's already there. So bottom line for me is we as actuaries can really leverage a lot of what we're doing already within Solvency II and deployed within the AI Act. And for the benefit of not overcomplicating things, I think it's good if actuaries are present there. And then coming to my second point very quickly, why is the EU AI Act an opportunity for actuaries? And let me go one step back. So the first question for me is AI actually relevant? And this can be answered with a clear yes. So if you look at earnings calls, and now really going to the very top management, if AI arrived there, and yes, if you look at the earnings calls from 2023 to 2024, there was a significant uptick in how often the word AI was mentioned. And also we asked a quite big study globally of different companies, 1,000 companies. And from 2023 to 2024, there was really a mindset shift that management is really now experimenting, or the vast majority is even scaling it more broadly, the topic of AI. And then the next question that emerges, and this is on the next slide, is it actually useful? And there one can say at the moment, AI is not really useful. So, and this is a bit of a provocative statement, but we asked 47 insurance companies globally, and 45% up to now, they've created 0 cost savings, 0 revenue increase through AI. So roughly half of it. And another 30% only 2% cost savings, 1% revenue increase, and only 1/4 is creating, let's say, in total 10% of benefit. And if we look at where you're generating value, it's where, let's say, AI started in the first place: customer service, claims management, underwriting, most of the time topics and activities that are repetitive. So this is where, let's say, the limited value today is being captured. Where it gets more complex, value has not yet been created. And that's a big opportunity for actuaries, because we are well trained in the more complex tasks. So AI is very hip, but it has not yet been realized. So the benefits have not yet been realized, and where the key challenges. And if you look at them, just to mention a few examples here, lack of accuracy and reliability of models is a key point. Insufficiency in AI literacy, difficulty in establishing an ROI and a real business case behind. These are all topics where actuaries can really add value for the benefit of the company. So as AAE, we're really convinced that actuaries need to step up and really enter this game more strongly than it is today. And if we go to the last slide, just to sum it up, how I see it. So AI is of growing importance, and it's a growing priority for companies. And if you embed it and apply it professionally and responsibly, there's a lot of value to be gained. And the EU AI Act accelerates this professionalization. And again, insurance companies are already leveraging a lot of risk management frameworks. They are dealing with models. They are dealing somehow with AI. And actuaries can help to build on those very robust workflows and on the very robust compliance frameworks out there. So to sum it up, the AI Act, we see it as a huge chance for actuaries to really shape the future of AI and have a say in this development. So this was a point landing, Esko.
Okay, thanks, Bogdan. Thanks, Jonas, for good insights on what is going on. For the importance of what you were speaking, we'll take a little more of this. There's been some questions in the Q&A, and sorry if I didn't ask them early or get them early enough for after Julian's presentation. But well, for the general question was about the cost of implementation of the AI Act. There is, of course, in the legislation, or in how the AI Act was introduced, there was cost-benefit analysis included, but maybe we have something more, some more understanding of that now that we are at this stage. Then specifically to Jonas, I have a question about human brain implants like Neuralink, whether there is any regulation on those. Well, this is a good question as the train is moving, but any comments on the costs or human implants?
That's a good question. I've never thought of it. I need to think about it, and I'll come back to you, Japan, in the aftermath. If you could just send me an email, I'm happy to answer, but I need to look it up.
Good.
I don't know, Bogdan, if you have any ideas on that end.
Not at this stage. Not anything that has been said. It's a quite a sensitive topic, and I think it will very much rely on the legal aspects of each region, country, and less so on the AI Act itself, I guess.
The question is if you're then talking to a human or an AI system. That's interesting.
Yeah.
Actually, I just read an article about that, and the problem there is that human brains are slow and they are linear, which means that even with these implants, we might not get much more of our cognitive abilities. But what do you think about the costs of implementation? And I wonder whether Julian is still there. You might have a comment on the costs of implementation.
Yeah, Esko, I'm following, of course, the other very interesting presentations. I don't have any specific answer on that, but usually when European legal acts are decided upon, there is, of course, an impact assessment that is being carried out. And I'm sure, as I said, I just joined the AI office, but I'm sure that that has been the case for the AI Act as well.
Okay, thanks everybody, and we are moving forward. There was also a question about fraud prevention versus detection, and we know that prevention is wider than detection, but probably that is not an area where we have clear answers. So we are moving forward. We have the pleasure of having Anni Hellman here to talk about the work on drafting the first AI Code of Practice, an initiative by the AI Office to take forward. So Anni is a member of our Artificial Intelligence and Data Science Working Group, and she is former head of unit at the European Commission. So please, Anni.
Thank you, Esko. Let's see, I will share my presentation. I hope you see it now. So thank you very much for the presentations. I've been quite impressed with the previous 3 presentations, which also partly took over what I was going to speak, but that's life, and that's okay. I'm going to look at an angle which is slightly more practical. It relates to the kind of the AI Act big picture, and that is the Code of Practice, which is referred to in the AI Act, and which also Julian mentioned, and especially on the process of that act. I'll later say a few words about the content also, but the process has been quite interesting, and it's a very big challenge for the Commission. What the Code of Practice is, what it is meant to be in the AI Act, is kind of an interlink between the providers, designers, users of the AI, and then the AI Office. And it's a tool, a temporary tool in a way to ensure compliance. And Code of Practice is a co-regulatory tool, so it is not definitive, but it's encouraging people to use it to ensure compliance. The process has been quite a challenge and very interesting. The AI Office facilitated the creation of the code through 4 working groups and through employing about 1,000 stakeholders in the process, with an aim, obviously, to have a very large content, a large input of different viewpoints of comprising businesses, member states, civil society, and experts. There was a 3rd draft published for the working groups where I was part of in March this year, and the aim was to publish the final version in May. That didn't happen, which is quite logical in the sense that the process is very ambitious. The timing was very ambitious. Currently, we are expecting to have the information about what the code will be like at latest in August this year. The content of the code, so what it aims to do is set down those rules that have already been mentioned about transparency and copyright for all general purpose AI providers, and safety and security measures for those general purpose AI providers which have systemic risk. And emphasis is to be proportional, continuous, future-proof. So these are the 2 definitions which already have been kind of browsed through, which are relevant for the Code of Practice. So what is a general purpose AI? It's a model that has significant generality and is able to complete wide range of distinct tasks. And the Code of Practice is the part of the high risk, relates to the high risk part of the AI Act, and it completely focuses on this general purpose AI systems. And part of it refers to those GPAI which has a systemic risk. And systemic risk is in a way the key of all of this, to be sure that in Europe any AI that would have its application area in areas of the Union where it could have a significant impact because they have a huge reach, or they can have negative wide effects. And it would have effect on those areas which already have been mentioned: public health, safety, public security, fundamental rights, or society as a whole. The Code of Practice is mentioned in recital 117, where it says that the Commission may decide to approve a Code of Practice and give it general validity. And the other key element here is the AI office, whose role is then to look into this Code of Practice, facilitate drawing them up, and then to ensure that way that the compliance is done. Now, the AI office, we were quite curious when we saw it in the AI Act that how it will happen. And in fact, the AI office, which Julian already described, is part of my previous Directorate General Connect. And within this structure, it is in fact one of the directors that has become the AI office. So we have our experienced colleagues who have been working on AI-related issues, legal-related issues for a number of years, and they are now in charge of the AI office, so it is in very good hands. So the process, as I said, it was about general purpose AI, especially with systemic risks. We had a large consultation of multi-stakeholders by the Commission, which also the AAE responded to. There have been 4 specialized working groups. The aim is always to have experience, independence, geographical and gender diversity. The challenge there, of course, is that when you have 1,000 stakeholders, what often happens is that of those 1,900 are small civil society organizations, and then a smaller part may be those representing businesses. But the aim has been to cover all of this equally. The aim originally was, as said here, to have the drafting sessions from October to April. However, that has been now delayed. So we had 4 working groups, one on transparency and copyright-related rules, another one for risk identification and assessment, and then for technical risk mitigation and governance risk mitigation. And these all drafted their own parts of the Code of Practice. We had chairs. I will not dwell on that, just to mention that the chairs were mainly academics. Some were more into AI and some were more into legal issues, but it was academic-based chairing. This is the old process, and I left it in gray to where we are. So since March 25, the work has been carried out with the chairs, with the help of the Commission Secretariat, and we are waiting then what happens next. So the new deadline is by August 2025. We, of course, were quite eager to have a code to present in this working in this webinar, but that we didn't manage. But we are curious to see how it ends. So the objectives of the codes was to align with the EU principles and with the AI Act and international approaches, to be proportional, fully future-proof, and then to support the growth and innovation. And in general, the code should help providers of GPA models to comply effectively with the obligations, and quite importantly, on the other hand, to help the AI office effectively to assess the compliance. So this is kind of the link of those 2 parties with which they can work and with which they can ensure kind of a continuous compliance. And it's not only to kind of one-off when an AI system comes to Europe that it would be then used, but the idea is that the Code of Practice enables kind of a continuous, up-to-date and compliance requirements to be filled through the entire value chain. Specifically, the Code of Practice has focused on 2 things. One is that the providers of general purpose AI models have to comply with the law of copyright and to increase transparency. And these are done through a number of different templates, different documentations that are required. And then specifically those who are in the area of systemic risks, where they can have this wider impact on the key areas mentioned, then how to effectively and continuously assess and mitigate those systemic risks. So it has two parts, one on the general purpose AI for transparency and copyright, and then the risk management for the general purpose AIs with systemic risk. And for the first part, it basically presents templates and methods for providing the relevant information. There's going to be a model document to be filled, at least that was the plan then. And for the copyright, the same thing. There has to be a copyright policy, which is quite important because of the access to data and crawling internet. So there has to be a copyright policy, which the provider of the AI system then commits to. And these are also relevant for all. And then for risk management, like I said, there has to be systemic risk assessment criteria, acceptance criteria to be sure that the risks that are seen are also known and understood, and then how they are assessed and how they are either accepted or mitigated, and this on both technical side and governance side. So how is this relevant for actuaries? We have discussed this already earlier, but there are two basic elements which I mentioned here. One is that, like Esko already said at the beginning, that the actuaries know about the code of conduct and ethics. And there, I think the Commission, the AI office, and of course the industry will be very will benefit a lot from the actuarial help. And then indeed, as mentioned already, some of the actuarial tools may fall in the remit of the AI Act. So first on actuaries and codes, this has been mentioned already. For decades, if not centuries, we know about data and we know the challenges there, and we have also learned about the ethics. And I think actuaries really are uniquely positioned to be of assistance in this work. And I think it's a new area of work where actuaries will be quite in high demand. And then already this was also mentioned, I took up only one of the parts that Julian mentioned, that in the list of high-risk AI systems which are mentioned and defined as high risk, in Annex 3, there's a clear reference of risk assessment and pricing in relation to natural persons, and in the case of life and health insurance, which is kind of understandably the key, because that's where you have the personal data. And I'm quite happy to hear that at the moment Commission is not thinking of extending this, because I think this will be an area where we will see how this application actually works. Now the question is, would this be ever relevant for insurance companies? It might be, but I think that is not something that we need to think about right now, but it's something that needs to be kept in mind constantly when GPA systems are developed. So where are we now? There was a first draft of the code of practice that was quite challenging. There was a lot of pressure to the AI office from the civil society organizations to obtain a very high transparency. On the other hand, there was a bit of confusion as to the aims. The third draft, which is the last that the working group saw, was quite a positive development from that. And we will then be very curious to see how it becomes the final version. The requirements are heavy, but they are only rarely required. This was the last message we saw about that. The assessment of the AI office was that only a few companies would be in scope of its obligations. This means the code of practice to be implemented as a whole, 5 to 15 companies at a time. And the focus now is more on required outcomes than on techniques to be used, and to a descriptive approach, which is good, because then we can actually really describe what risks we are concerned about, and then see how to maintain those risks under control. What is quite interesting is that it introduces also this concept of a safety and security framework, which will be, I will come back to that in the next slide. It will be something I think that will be used in the future. So providers still at the stage, the last version we saw, perceive that complying with the code a very labor-intensive task, but there has been positive development. At the same time, the civil society organizations continue to insist on a more detailed approach, transparency, even access to the actual code, to the actual AI system, with a view of fundamental rights to be in jeopardy. And basically that's what we are there now on. We will have the part of the AI Act that is concerned with these obligations will be effective now on the 2nd of August in any way, except for some areas. So something will be turning up soon. There are now quite a number of published safety and security frameworks. For example, on these organizations like OpenAI, Google DeepMind, Microsoft, etc. And the trend is towards transparency and accountability from the leading developers. And we can expect that the AI Act Code of Practice will follow this approach. So now there's been a targeted consultation. There's been some contributions for clarity of the scope. These were discussed in the working groups in the beginning, but now there are separate elements here. So now we are waiting for the final code of practice to be published, and before that there are some consultations which obviously will contribute to the work. So when those are finished, I think we will be quite eager to see the final code. Thank you.
Thank you, Annie. And of course, we don't count out the idea of somebody generating an actuary GPT. So maybe this will be an area for that. But thank you. And we are now turning to Claudia. Claudia will talk about explainability in artificial intelligence systems. As actuaries, we are obliged by our standards to understand the models and be able to explain them, and this of course extends to the use of AI models. So please, Claudia is the second vice president of the Artificial Intelligence and Data Science Working Group of the AAE, and he's been developing ideas in this area. So Claudia, please explain about explainability.
Thank you, Esko, and welcome to everyone. So we have only 20 minutes, and I would like to show you in these 20 minutes 3 main subjects that are, obviously the explainable artificial intelligence, then an overview on some new mixed methodologies, and an overview on a new method, post-model quantitative control method that is conformal prediction. So let's jump directly on to the next slide. So what is explainable artificial intelligence? First of all, it's a new research field. So it's not something small, it's something big. It's something where a lot of people are working, are involved, researchers, academia, but also many in the private and industry. Like companies like OpenAI, Anthropic, they are heavily, NVIDIA, they are heavily involved in this new research field. For the actuary, the explainable artificial intelligence is highly probable that will be in the end a tool, okay, but it's important for you to know that it's a very big research field with many people working in it, okay. For this presentation, I decided to use this categorization in red explainable artificial intelligence methodologies and blue artificial intelligence methodologies. So this is already telling you that there are many of these methodologies. The red ones, these two names are not by chance. They have been decided, let's say, also in connection with the IT security systems. I don't know if you have any knowledge about IT, but you know the red team usually are the teams that are devoted to and focused on security, on understanding the behavior of the models as well its vulnerabilities. Whereas the blue team are the ones that are focused on the security and the human values of the models. And there are red explainable artificial intelligence models and blue explainable artificial intelligence models. We will see what do we mean by those. So the red artificial intelligence explainable models are the ones that are devoted, let's say, for expert, usually for people that trains, audit, and debug the models. People that have high access to internal model parameters and training data, so that really work on the models, and people that usually have a really high level of technical knowledge. So these are models that have been specifically developed for these people that have this type of use of the artificial intelligence models. Whereas the blue models are models that are specifically and usually adopted and used by an audience that has, let's say, are the final users of the models. So are not people that are developing the models, but are usually people that are using the models. Okay. So we can imagine a policy holder, we can imagine a bank customer, we can imagine a patient, depending on where they are applied. Usually these people that are using this type of models are people that have no access or partial access to the models and the data. Okay, this is really, really different with respect to the red models. And usually these are people that have low or no technical knowledge. Okay, so these are people that are using these models, but that do not necessarily have access to the data that were used to train them, and not necessarily have a specific technical knowledge. But what is important, in my opinion, is that to understand and this differentiation between red and blue models, I think that should suggest that there is no single key to unlock all doors. So there is no single explainable artificial intelligence model that is the perfect one, the silver bullet that you can use in every possible situation. No, the key is using the right model for the right audience in the right context. So first of all, you should ask yourself, who is the end user? Who is the end user of this model? Or maybe it could be a person that is developing the model. So not only using it, but also developing it. Then you should ask yourself, what is the aim? So what is the aim of the model? Why you are implementing it? Why you are training it? Why you are deploying it? Then what is the interface that can be used? Because not all models can be accessed in the same way. If it is a purely internal model, so a model that you are using for purely internal reasons and activities, it's highly probable that you will not have a user interface. It's highly probable that you will have maybe, for example, just accessing and using it through code. Something different might be if the model is used in a deployment environment. So what is the interface that can be used for this model? Finally, what type and level of model data access is it necessary? So to the user of the model, is it necessary to use this model? Is it necessary to have a full data access or a full, for example, code access? In that case, obviously, it would be a much more complex model and would be different from a model that does not need at all access to the data that were used to be trained, or to do the code that was used to be trained. But let's do just a couple of examples, to try to understand what are these red and blue explainable artificial intelligence models. So in this slide, we have an example of a red artificial intelligence explainable model and the blue explainable artificial intelligence model. So on the upper side of the slide, you see a mechanistic interpretability model that Anthropic in this way, in this case, developed, but not only Anthropic is among the, let's say, the industries in the industry world, among the ones that are mainly more involved in explainable artificial intelligence models, but they are not the only ones. This is an example of how Anthropic is trying to explain and interpret models with this specific approach that is named mechanistic interpretability. So they are trying to identify which neurons and connections are responsible for specific behaviors, or they are trying to understand what internal representation the models learns. And finally, they are trying to test how changing a specific embedding, a specific neurons, how the model reacts. In this case, we are visualizing in the left side a specific embedding, so a specific neurons that was deactivated, and they observed what the deactivation of these neurons was implying in terms of functioning of the model, how the model was reacting, which answers was providing, deactivating that specific model. It's like, if we deactivate a specific word that we have in our mind, how our mind would react, how we would rephrase the same concept that we would say. This is what they are doing, and you can imagine how powerful is this approach, because basically you are trying to really to capture the work, how the model works, and you are trying to basically direct the working and the functioning of the model. In the lower side of the slide, we see a typical blue explainable artificial intelligence model that is a local, and we will see later what we do mean by local model that is the ICE model, and it's one of the most used ones. Let's jump now in the actuarial world. And how the actuarial world is leveraging these explainable artificial intelligence models. So as I said at the very beginning, in the end, the explainable artificial intelligence models for the actuary will be a tool, okay? A tool to explain how the models that the actuary is using are behaving, which are the most, at the moment, used models and methodologies, the four that we see in this slide. So the first three, so methodology, LIME, ICE, and Shapley value, these are local model and local indicators. The fourth one is a global. What do we mean by local? By local indicators, we are basically at what formally we would say microprudential level. So these are models, the LIME, the ICE, and the Shapley values. These are models that are telling us how the single instance, the single prediction for the single instance was produced by the model, which are the variables and how each variable impacted on the prediction, in the single prediction that we created with the model. Whereas the partial dependency plot, that is the last model that we see on the right side, it's basically the methodology that is a global level. It's conceptually close to what we know, know as relativity plot. So this is telling us how a specific variable is behaving at the global level, so not at a single instance level. Okay. Recently, some researchers, but not only researchers, not only in academia, but also in the industry, tried a different approach that is mixing these specific models like the ICE, the Shapley value, or the LIME, to try to go beyond certain specific intrinsic limits that they have. And what they are trying to do, this slide is simplifying obviously what has been done. It's not mathematically, it's not what we see, but basically these mixed scores are a mix of the previous ones that we have seen previous ones. So a mix of the partial dependency, of the LIME, of the SHAP, and mixing them, they are trying to overcome the intrinsic limits that are in each of these methodologies, okay? So this mixed approach it's mixing the measures that we have seen before. By mixing them, what we are aiming, what we are trying to create. We are trying to create specific measures that are telling us how faithful, simple, and stable is a model. So we are trying to create more universal, okay, a generic measures that are telling us specifically how faithful it is, the model. So which is the level of fidelity of the model with respect to the variables that we have used. So if I remove or I perturb a specific feature, how big will be the change in the prediction of the model, you know? So how will change the model output accordingly to this change in the specific variable? This is the faithfulness. The simplicity is basically it counts how many features rank highly and how evenly important they are distributed. Okay, so the more there are the features, and obviously the more complex it is, the model. Finally, the stability measure, it's a measure that is telling us basically how the model might be exposed to outliers. Okay, so is it the model stable or not? And so this is a measure that is really important. Actually, all three measures are really important, and they are coming from mixing the previous explainable artificial intelligence measures. This approach, the mixed approach, obviously adds, gives deeper insight. It has some positive aspect like holistic. It gives an holistic perspective because, as you have seen, we are talking about very universal and general concepts: stability, simplicity, faithfulness. These are very, very high level concept, you know. Robustness, because we are mixing more values among them. Interaction discovery, so we discover if and how variables are interacting, and stakeholders alignment and regulatory goodness, because we can deep dive at microprudential level again. Obviously, these methodologies have, as all measures, nothing new, obviously, have their limitation and challenges. We can have information loss, we can have weight tuning, we can have domain sensitivity and compute costs, because please remember that some of these measures are at single instance level. So you should be able to produce them for each instance, for each prediction. So again, we are at microprudential level. So computationally speaking, this might be heavy. Quite recently, the actuarial research world met the, I would say, the explainable artificial intelligence research world and merged it with a new, I would say, post-model quantitative methodology, that is the conformal prediction. So there are researchers that have put together the explainable artificial intelligence world with this conformal prediction, that is a methodology that goes beyond the usual validation rules that we use for to validate the model performance, like, I don't know, the root mean square error, or the area under the curve, the lift chart, etc., etc. For some models, this might work, but might be limited evaluation methodologies. So we introduced the conformal prediction that, as said before, it's a post-model control methodology. It's basically a post-processing wrapper that you build onto the fitted model, a model that can be NGLM, can be a gradient boosting, can be a neural network, an encoder. It converts the model points estimate into a prediction interval for numerical targets and or a short set of labels for classification tasks. So specifically, the key properties of the conformal prediction are that it is model agnostic. Okay, it works on a finite sample of data. So it's basically working on data that the model has never seen. Okay, and usually you have to keep aside for that a certain percentage of the training data set. And it is at single instance level. So he has the per instance delivery. So it provides you in interval before you know the true value of the label. Okay. So, and it provides you confidence intervals that are independent, so that are distribution free, that are independent on a specific distribution assumption that you might do. It works for both classification and regression models. Here we have two examples. We can't go through all of them because I have only 3 minutes left. But this is just to tell you that you can use conformal prediction for both classification and regression models. It applies to GLMs, to gradient boosting, neural network, encoders, to LLMs, to all type models. Is model agnostic, basically. You could say, but we have an interval confidence also in the normal relativity plots, for example. Yes, true. But that interval confidence are distribution dependent. This is the big difference. Okay. For example, you are usually assuming that the errors are normally distributed, you know, whereas the conformal prediction is distribution free and model agnostic. And moreover, it works on a very specific new data set, never known, unknown to the model, basically. Okay. So these are the main differences between the conformal prediction versus classical prediction intervals, and why they are different. Okay, what is the added value of conformal prediction? Obviously, as all methodologies, conformal prediction has its own limitation and relative mitigation. Among them, I have the time only to list, in my opinion, the most important ones that are and the fact that the exchangeability assumption, so obviously the data, the variables and the data in the calibrations data set should be similar to the one in the training data set. So otherwise you might have issues. The calibration data cost, so you have to leave aside, so you can't use for training a model a certain percentage of the data, between the 5 and 15% usually. If in the data you have many classes, you have variables with many classes, you might have an issue. These are just some of the most important limitations, but we can go through all of them. Final slide. So we have seen explainable artificial intelligence methodologies, mixed approach and conformal prediction. The key, in my opinion, the key for an actuary that tries to use explainable artificial intelligence models is never use and never rely only on one indicator. Always use multiple indicators. And the second one is, given that it is this is a reality that is under strong development. Every day you might have new models, new applications, new research papers. Please look always for actuarial consensus and seek practical guidance, because you really almost every day you might have a new application, a new methodology. So it's really, really key to keep and stay updated. Thank you.
Thank you, Claudio. I don't see any questions in the Q&A, but one thing here certainly is, I already said that we have the standards and then we have these models, and we certainly use large language models now to aid in our work. But do you see any possibility of really including an LLM into an actuarial model while still obeying the requirements to be able to fully explain and take responsibility of the model?
Let's say there are already application of LLMs in the actuarial, and I would say not only in the actuarial world, but also in the underwriting and claims handling world. So there are already application, and you can already track how the LLM is thinking, you know, and how the single output that the LLM is providing you have been produced. So which are the references that the LLM used, which are the specific parts of, I don't know, the image of the document that you provided him and used to produce the output that he provided you. So this is, we already have such use cases, okay? So it's not, I would say it's reality, you know? Obviously they are not widely adopted. Okay, but we do have these use cases. Absolutely.
Thank you, Claudio. So it's been an interesting 2 hours. It's been showing what an important impact the Artificial Intelligence Act really means for everybody horizontally, and also insurance, pensions, and financial services. Secondly, I hope it has shown that actuaries play a clear role in creating responsible and reliable use of artificial intelligence. So many thanks to the presenters, many thanks to Julian who told about the ideas of the Commission and the AI Office. Many thanks to Bogdan, Jonas, Annie, and Claudio for your insights. And many thanks to all of our listeners. I think there will be a feedback request coming to you from ActiveView, who runs the practicalities. We are very happy to get your feedback, but on the other hand, please do the feedback yourselves and not ask ChatGPT or a Copilot write your feedback, because we can recognize if that has been used. But all thanks to everybody, and this is certainly an area that needs continuous monitoring, ideas, developments in a fast-moving train. So let's try to keep up to date on this, but also enjoy the summer that is ahead of us, with some people having summer breaks already in July, but others only in August. Thank you.
Thank you. Bye.
Thank you all. Goodbye.
Bye.
Bye.